Hello guys, and welcome to my YouTube channel once again. In today's video I want to show you how I was able to there's some trades I took that gave me over $700 in profit, guys. All right, so I'm going to show you how I was able to analyze the market to see that opportunity, and also some other opportunities that I missed, which by the time you watch this video you also learn how to spot such opportunities and take action while it is still available. All right, so I have to go to the daily time frame to do a top-down analysis. All right, so as you can see on the daily time frame, you can see the market has been bullish. Crash 500 has been bullish for a while, and it has not gotten to its all-time high like crash boom 1000 did, but it just got to a certain price and started giving us this kind of movement here. All right, so we are not interested in what it's doing, if it wants to go up or down, but we want to just analyze so you can easily find an opportunity to enter the market. All right, so first of all, I will need to find the key level here, or we have to mark out the key resistance level. The current key resistance level here in the market is here. You know, I used to tell you where you have the highs and the lows of a higher time frame candlestick. They represent strong resistance and support zones. All right, so I place this horizontal line here to mark a strong resistance zone, expecting market to react on getting to that zone. All right, so I also mark another zone down here. I can see there's a key level right here. I can see here market reacted along this level. You can see the buys and sell activity that happened right there. There was a buy at this point. There was a buy at this point. There is a sell at this point. Then buys at this point also. So this is a key level in the market too. And I can see another strong zone right here. You can see where the market rejected here. You can see the wick here, the wick here, the wick here. So this is a strong zone to also look out for, to also take note of on the chart for this particular market. You understand? All right, so you can see the market even reacted on getting back to that zone, because after this bearish candlestick broke below this same zone, you can see the next time market got to that zone was this, and there was a reaction. There were reactions for about how many days market got there before the current candlestick that is actually trying to buy above it. All right, so after marking out these levels, the next thing we'll do is to go down to a lower time frame, the daily time frame, the 4 hourly time frame, to see if we can find some key levels there to mark too. You understand? And also trend lines. Although there's an opportunity to mark a trend line right here, there's a trend that can be marked right here at this point. You can join these two lows, 2 or 3 lows here with this trend line. You can join them with this trend line and to act as a strong support, to show there was a support right there that caused the market to be reacting each time it gets to that level. All right, so let's go down to the 4 hourly time frame, so we can also mark out key levels and key resistance zones. Although I can see a key level right here, but I need to go to the 4 hourly time frame to see it more clearly. All right, on the 4 hourly time frame, this is what we have in the market. Then if you want to look at the current side of the market, we will see that market actually was dancing around here. You can see market was selling around here before it was able to break above. Market sold around this level for a very long for like this must happen. Let's start from here. This was on the 18th of April, and it was able to break out of this point on the 23rd. So it happened, this market consolidated around here for some days, and it broke massively and then went to the upside. All right, so it's a strong zone to take note of. So in that case, and you can also see that market also bought from that zone previously. This is the same zone here, market bought from it. Let me get the arrow line too. You can see the market also bought from this same zone previously and also sold from this same zone. So this is actually a key level on the 4 hourly time frame, and it has to be identified. Let me duplicate this line and place right there. I can decide to use a horizontal line or a rectangle, though the rectangle is best so it can help you mark it as a zone. But if you use a horizontal line, it will just mark it as if it is just a point. But it doesn't matter if you understand what you're doing. It doesn't matter. It doesn't matter at all. Know that what we are seeing them as zones and not mere points on the market, guys. All right, so I decided to leave this line right here, and then I need to change this color so I can differentiate them. All right, I've changed the color immediately to blue. Then let's see if we can find another key level on this 4 hourly time frame. Is there any other key level? I'm not sure of any strong key level again, except this one that is just too close. I don't feel the need to mark this as a key level. I do not feel the need to mark this. Besides, it's far from the current price. It's far from the current price, so I will just leave it immediately. All right, let's concentrate on the current side of the market. Now, the fact that market actually had to dance around here, you can see the market after breaking out of this point. Let me get the arid line too. Market actually, after breaking out of this consolidation, it went to the upside, then sold back down to this level and went back and came back and still sold to this level. Then it means that this is a strong resistance zone, a strong support zone on the 4 hourly time frame, which has to be taken note of. So let's get I can use a rectangle to try to mark this. It still works. Or I can use a horizontal line. Let me just use a horizontal line to mark that. So that's it. All right, and also we can notice that there's a kind of market structure right here. We can see the high, low, the higher high, higher low, higher high, higher low, and so in that case means the market is in an uptrend. So we have to mark it. I have to duplicate this line and put one above here, right there, like this, so we can guide the movement of the market. If you understand my structure, you know why we have to do that. We are trying to guide the movement of the market so that we know when it's breaking out of this particular trend or pattern. Then we know what to do next. All right, so the next thing we'd have to do now is to go to a lower time frame, another lower time frame like the 1 hourly time frame, so we can see if we can get some stuff right there. You can see where we marked on the 4 hourly time frame. You can see how market actually reacted to this zone each time it got to this zone. You can see the sales opportunity each time market got to this zone for about 4 or 5 days. This was happening for about 4 or 5 days, and after it broke out, you can see here it formed a double bottom. You can see it formed a double bottom here too, and this happened between 24th and 25th of April. All right, guys, so you can see the market is buying to the upside right now. So as it is, let's see if we can find a key level on this 1 hourly time frame. I'm not sure. Let me just zoom out a bit and see the chart if we can find a key level. It doesn't seem like there's another key level right there immediately. All right, so we'll have to, let me rush to the 15 minutes time frame so that I show you the entries. Because now let me show you one thing before I go down to the 15 minutes time frame, guys. You can see the movement of this market after breaking out of this consolidation, this 4 hourly time frame consolidation. You can see that the market moved impulsively up to this level, then started giving us this kind of correction movement, kind of impulsive correction movement. So and when we go to the lower time frame, like 15 minutes time frame, you really see it more clearly. These are opportunities based on my strategy. This is an opportunity, this is an opportunity, and this is an opportunity too. This is an opportunity too, guys. All right, so let's go down to the 15 minutes time frame so that I will show you, I'll really explain what I'm talking about there. All right, the 15 minutes time frame. On getting to the 15 minutes time frame, this is the point we were talking about on the 1 hourly time frame. You can see that market actually sold. When market actually got to this place, it moved. If you were a child, this is the first thing you would do. If you saw when this actually happened, market got to this place, you would want to place a line like this to wait for a breakout and proper retest before you would want to sell, guys. And you can see, based on my strategy, it didn't work for this particular setup. The setup wasn't complete. Besides, it was just one low that created this highest high. And if the market is going to sell, if we want to use my strategy, market has to, after breaking out of this trend, it has to break below the recent recent low that created the highest high, and this is the low that created the highest high, so it don't work. That strategy did not work at this point. So besides, this is not the actually trade I took. I'll show you the trade I took. All right. So the market came to this level and still went back up. That's why I always want to market to go below the low, the higher low it created at that time, or the highest low it has created, and it must be the low that caused the highest high. you know the last higher high. That's the low that caused the last higher high is what we always want for the market to go below. As I said, below, to create a change of character. All right, but since it didn't happen, there wasn't any opportunity at that point. So let's go further. Let me show you guys something. Let's go further as I show you something, guys. All right, you see, the market later gave us another structure, because if you are monitoring a pair, you have to be dynamic. You don't need to be static. You have to just follow it the way it does, the way it moves. You follow it up, guys. So as you can see, there was a movement right here. Let me put this way. Okay, this is the best place to position it. All right, you can see there was an activity now market on buying from here got to here, came to this line, then bought again to this same level, and with these confirmations, you can see the sales down to this level now. Then I looked at this place. If you look at this place now, you can see the market bought impulsively up to this level. Market bought impulsively up to this level, then started having all these red candlesticks. And if you look at this place closely, you will see that this is an impulsive correction. The market was moving impulsively, then started moving in an impulsive correction as it approached this zone here, indicating there's going to be possible change of direction, of the market. But based on our strategy on this 15 minutes time frame, there is no opportunity to trade, because the highest high is still this. The high that created the highest point is still this one. So we want to wait for the market to break through this line, go below this low, then comes back to retest maybe somewhere here, a strong key level, before we find an entry to sell. But unfortunately, that did not happen. So I decided to go down to 5 minutes time frame to find, because I've noticed that if we have this kind of an opportunity, this kind of a setup on a 15 minutes time frame, the best thing is to go to a lower time frame, like the 5 minutes time frame. Then there's a very high chance of finding an opportunity to trade. If you find this on a 1 hourly time frame, you go down to 15-minute time frame or 5 minutes time frame, you'll find an opportunity to trade. So I decided to go. Let's go to the 5 minutes time frame. Let me show you an opportunity that you would have traded if you saw this happening, guys. All right, on the 5 minutes time frame, let me go to that point. Okay, so look at the movement here, guys. This is the movement right here. You can see the impulsive movement. Then it started correcting, started giving this, and it sold. Now, based on this particular movement here, this is a high, this is a low, higher low, higher high, though this is a lower high now. But the market, yes, after this, was there any higher high? Okay, this at this point the market is higher than, market got to a higher point than what we had here. So meaning this would be the recent higher low. This would be the recent higher low, which we want to wait for a break, and the market has to come back to retest, guys. All right, so let's mark it. Let's mark it with a line. Let's mark it with the horizontal line. Let me get the trend line to draw a horizontal line right here. All right, a horizontal line. Then after drawing the horizontal line, so after drawing the horizontal line, you can pull a trend line along these points to see the breakout clearly. See, there was a breakout. You can just this, because here we have more touches, so you can see the breakout at that point. And you can see the market after selling below that point. After selling below that point, it got back to this same level. Now, if you put a horizontal line here, you see that this was a key level here in this market. Let me get a rectangle to prove that to you, that this was a key level in the market. All right, so you can see that market bought and sold around this level here. Market bought and sold around this level on the 5 minutes time frame. So you can see these buys at this point, sells at this point, buys at this point. So market came to this zone and it bought and it sold. You see the massive spike to the downside. Then on breaking out of this main trend line, this is the main trend line. then it still came back up again into this same zone and bought again and sold again massively to the downside. You see, now the opportunity you wouldn't have found or gotten if we were still trading on the waiting for it to happen on the 15 minutes time frame. You see, we got the opportunity on the 5 minutes time frame. This goes to show you that if you can always be moving around time frames, like if you see you can't find an opportunity on a higher time frame, you try to, then you see a structure that can possibly give you an opportunity, you have to run to the lower time frame to find an entry to that opportunity. Meanwhile, let's go back to the 15 minutes time frame, guys, so that I show you where I took those trades that gave me massive profit, guys. All right, so now let me go straight. It was this particular pair. I was monitoring this particular movement here. I was monitoring this movement. The first thing I did was this one here, when I noticed the market was selling in a kind of a channel form, though there was a kind of a fake out too. See this, guys. When I noticed this movement, so I waited for a breakout and proper retest. You can see the market broke out of this trend line. There was a breakout of this trend line, but unfortunately the market did not get to the recent lower high, because based on my strategy the market has to go above the recent lower high, then come back to retest on a key level like somewhere here where it has been buying previously before I would want to find an entry. So the market didn't get here. So when I noticed that market got here and then pulled back to this trend line, I remember the strategy. One of the strategies I've shared on this YouTube channel on how to trade without waiting for a retest, how to trade a breakout without waiting for a retest. Looking at the fact that this was a very far from here. You understand? So on seeing this bullish engulfing candlestick pattern, I had to enter a trade, just target this point, and I got some cash from that. The market bought and I took my profit at this point because I suspected there might be a spike, market getting to this point. So I decided to take some profit, and the market also continued buying. So on going above this particular high, it went up, then pulled back to this zone. And if you can see, this is actually a key level, somehow a key level in the market, a very small key level, because you can see the buy and the sell. Let me just pull this along. Let me pull this along. So when I noticed this point in the market, I decided to buy. I bought at this point. When the market, after going above this high here, this high at this point, then I waited for it. It came back to retest here with this confirmation candlestick. I went and bought. I didn't really buy much. I just buy a few candlesticks, and before this spike came in, I think I closed when I saw this bearish candlestick. So I closed the trade after seeing this bearish candlestick. So that was one of the opportunities I took, and the next one was to monitor this trade, because seeing this movement, I knew the market was going to sell. This kind of movement, this is a kind of a corrective movement, mix. I knew the market was going to sell. Seeing a mix of these candlesticks, red and green candlesticks, I knew the market was going to sell. So all I had to do was just to join some trend lines and wait for a breakout and a retest as usual. So if you join a trend line like this, then then all right, so as you can see the movement here, then if you wait for a breakout and proper retest, then the breakout also the market has to sell below the previous high, a low that caused the higher high. You can see, so this is the highest high and this is the previous low that caused this highest high. So the market went below it, came below the trend line, even went below these other lows here. So the market retesting on this same key level. This is a key level marked previously. Market coming back to this key level at this point. I entered a sell, guys. I entered a sell at this point, and it gave me a good profit. Let me just bring out my. I sold at this point. Although I actually entered this trade at this point. This is where I entered the trade on the close of this candle. No, I think I entered that trade somewhere around here is when I entered the trade, and it gave me a reasonable amount of profit. I closed around this point here. That's about $36 in profit. Then when I noticed the market still came back again to this same level, with this candlestick confirmation, I entered again. Entering again, it gave me, let's see as it went. This is about 55 USD for this point, but I knew the market would most likely sell below it. I knew the market was going to sell below it because of the fact that it was descending. So if this was a high, this was a low, this is going to be a lower high, and it's going to have to create a lower low, a low below this. So the market, you can see even one spike that happened from this point, the spike that happened here, you can see it got to this level. That's one thing about catching spikes, you see. So over $80 in profit, guys. So the trade was really massive. The profit was massive, and there are other opportunities right here. The video is already too long. I do not want to continue again explaining these things. All you need to do is try to practice these things you've seen I have demonstrated in this video, because that's the only way you can succeed. Just learn to mark out these patterns, learn to go between time frames, learn to identify the structures. You know, all these structures, when you see a mix of red and green candlesticks moving in one particular direction, you try to join trend lines to guide the movement, wait for a breakout. Market has to go below the previous low, and then comes back to retest. But if the recent low or high is far from where the market is breaking out, you can just enter a trade. You know, you don't need to wait for the this thing, for the retest. Just enter a trade, target where that recent high or recent low is, then take your profit and wait for it to come back to the key level which you expected to sell or buy massively from, guys. It's as simple as that. It's not difficult, guys. All right, so there's a link in the description of this video. If you want to enroll in my one-on-one mentorship, you can click on the link in the description of this video. It's going to take you to my Telegram channel, where I post information about my events and other stuff, sometimes more high probability trades. Just click on the link to this in this video, in the description of this video, and go to the Telegram channel. You'll find a link to contact me directly. Then we can negotiate your mentorship, how it's gonna be, and schedule it. If you are enrolling in my one-on-one mentorship, we can schedule your classes, and make sure it favors all of us, both of us, guys. All right, so please like this video, subscribe to this channel if you've not done that yet, and share your thoughts in the comment section. All right, guys, so stay blessed till my next video. Peace out.